Welcome to Duke University's Heat Policy Partnership Summit. This briefing will focus on blended finance and the future role of insurance. I'm Ashley Ward, the Director of the Heat Policy Innovation Hub at Nicholas Institute for Energy, Environment, and Sustainability, and I'll be moderating our panel of experts. On the stage today, we have Jackie Higgins, Head of Public Sector Solutions for Swiss Re, Brock Long, former administrator of FEMA and current executive chairman of Hagerty's Consulting, Scott Tu, the founder and leader of the Center for Energy Efficiency and Sustainability at Trane Technologies, Pamela Williams, assistant administrator for FEMA's Grant Programs Directorate, and Jennifer Weiss, co-director of the North Carolina Clean Energy Fund. So one of the challenges, but also an opportunity for mitigating and building resilience to extreme heat is that no one entity owns this problem, something that we've been talking about already. It impacts so much of our lives, and I know this has come up in your roundtable discussions, whether it's poor health outcomes, contributing to labor loss, and thereby economic insecurity. It impacts learning outcomes, disrupts transportation and communication networks, something I think Brock will probably talk a little bit more about in a moment, these community lifelines. It reduces agricultural yields, potentially interrupting food supplies. And the communities that are often most at risk for extreme heat are also those that carry the highest risk for investors. So how do we wrap our hands around such a big issue? It seems like there should be and is a role for everyone. So how can the insurance sector integrate the risk for extreme heat into its existing framework, or do we need new frameworks for this? How can the finance sector and industry support mitigation and resilience to extreme heat? And what is the role of the public and the philanthropic sectors in creating opportunities for investment? So we're not leaving anybody out. Everybody has to get into this conversation. And so I'm going to start us off with Jackie. So what are some of the unique challenges that insurers face? This has already come up some in our discussions. And what are some of those challenges that insurers face when assessing the risk associated with extreme heat?
Thanks, Ashley. So this has been thank you for inviting me. This has been a really great 2 days, and I think a lot of conversations on the sidelines have been had. So I think first it's important maybe to take a step back a little bit and just understand that traditionally when people think of climate insurance, they think of traditional indemnity insurance. And what that essentially is property insurance, well, not indemnity, but traditional property indemnity insurance, whereby you are covering property in the event of damage. And so you get a payout based off of an adjuster coming and looking at the damage that you have. That's the traditional way of looking at it. What we've been trying to look at is to rethink that proposition and think about, are there more innovative ways where we can think about covering other unanticipated economic loss as a result of an event? And that's when we kind of delve into what's been existing for about 10 years, and Francis alluded to it. It's called parametric insurance. And parametric insurance, as I've said, has been around for a really long time. But now what we're starting to look at is how can we really apply that to look at helping more vulnerable communities, and how can we take parametric insurance and use it to help either cities, states, or communities to support their citizens. So the challenge is, one, looking at the tools that we have, right, and seeing how can we better apply them, and to better understand how this tool, for example, in the case of extreme heat, we're looking at really innovative ways to think about what kind of covers can we do. So for example, in an extreme heat event, you might have situations where a city or state needs additional money for transportation to get individuals to cooling centers, if that's something of interest, or revenue replacement for open air workers who no longer can work because of an extreme heat event. So the proceeds of a parametric, which is really triggered by the event itself. So essentially what happens is if there are 4 days of, and we've been talking about what the parameters would be, and this is one of the challenges, 4 days of extreme heat as defined, let's say, by a heat index, then the parametric would pay out, and that money could be used for any unanticipated expenses related to that event. And the parametric it's more flexible in the use of funds. It can be paid out within 4 to I mean, we've paid out in 4 days before, and so they'll have the money readily available and won't have to rely on their state or federal, well, no federal, but state budgets or local budgets. But we can go into more examples later in the session.
Yeah, and one thing that came up last night at the ball game, and I'm not about to just throw my entire script under the bus here, just because. But Jackie and Pam and I were having a conversation about this metric that we use for this threshold for parametric insurance, and the need for insurance companies to have guidance at the federal level from the National Weather Service, for example, about what those metrics are and how they get that data from federal agencies. But I think that was a very specific example to a larger issue, which is, what is the role of federal agency? I find in this issue a lot, whether it's that, metric for which insurance companies trigger a response, or whether it's, encouraging state hazard mitigation planning, or, helping secure grant dollars for communities, whatever it is, there is a role for federal agencies to play. And so, Pamela, I just want to give you a second to talk a little bit about that and what you see the role of the federal agencies are in this sort of public-private partnership with how we can.
So roles and responsibilities is so important here, and I think we talked a lot about that yesterday. Like, who's going to be the leader here? Who is going to provide the regulatory guidance? Who is going to provide the sticks, the carrots? In this country, we have a big challenge providing sticks. So what are those incentives? But what is the most significant thing that we can do to drive positive behavior, to remove those perverse moral incentives? And that's really money. And so, again, I think we look to the private sector to point to those public policy shifts that we need, those areas where we are actually tying the private sector's hands in doing the right things. And also those things, I look to some of those new initiatives that we're doing, like the community disaster resilience zones, where like the private sector is telling us we need tax incentives and things like that, because the federal government doesn't necessarily think in the best private sector terms of what you may need. We also need private sector innovation. So I think it's the federal government's job, and honestly, FEMA isn't the best at this, to convene the right public-private partnerships, to think about things in terms of frameworks, flexible frameworks, to facilitate those public-private partnerships so that we can get that innovation from the private sector, because everyone is so hungry for those best practices, those innovations. Immediately 2 years ago, when we started talking about prioritizing heat projects and mitigation, everyone was like, so what does that look like? Crickets, right? Because everyone's looking to the federal government for that leadership. But we need the private sector to be like, okay, here's where we've found success stories. Here's where we've tested that. Here's where we need those incentives to drive better behavior. This is where we need you to prioritize those grant dollars. Here's where we need more flexible authorities. And so I do think that the federal government really has a role to play here, to convene, to be flexible, and to drive priorities through that funding mechanism.
I think, and you just teed it up really nicely for Scott here, talking about, I know Trane Technology has been really thinking about technology development in the cooling space for sure, but also, with all that you do, we've talked a little bit about how industry can sort of balance their, the need, obviously the necessary profitability with their responsibility or desire, in your case, to address climate risk, including extreme heat. So, Scott, I just want to give you a moment to talk about, from your perspective, and, Trane developing, really working hard to develop and innovate on the cooling question, which has come up, my guess, in every single roundtable, but also, some of the challenges with respect to that too.
Yeah, thanks, and thanks for the time and for a diverse panel. I don't typically hang out with insurers, but today's different. Trane Technologies, for those that do not know, we're the U.S.'s largest provider of cooling and comfort systems through a variety of brands, some of which transport fresh food to all the grocery stores, but others that cool buildings like this one. I think we do all the cooling on the Duke campus, and maybe the buildings where you work, and maybe homes where you live. And people depend on us for that. There's a host of issues that come with all that. And I'd like to go back to a word you used, Ashley, in your opening around mitigation is still a huge responsibility of the private sector doing their part to bend the curve for companies like ours, where we actually use refrigerants, which are greenhouse gases, to provide the cooling. We are the company, one of the leading companies trying to transition away from refrigerants that have a negative impact on the environment. I think that's probably our highest priority, and our biggest responsibility is doing our part on the research, the innovation that moves completely away from refrigerants that might have an impact on the atmosphere. That's number one. Number two is, though, our work in trying to increase access to cooling. I mean, this conference is about the impacts of heat. I think all of us need to agree that we move away from this old thinking of resilience being how do we bounce back. Resilience is not about bouncing back anymore. Resilience needs to be about how we adapt and change to meet a changing weather pattern and extreme heat events. That's what resilience in the future will be. It's going to be the work that happens before the event occurs. Whether we're talking rural America, whether we're talking individual homeowners, or whether we're talking about cities, states, we need partners like FEMA to help us think through master plans. This has to be done on a master plan level. We're able to help, for us, a customer like a Duke University, we're able to help them because they build out master plans that says we want to build out the plan for 2028. What does that cooling and heating look like for us? And that's the best way for us to provide the very best solutions. The most innovative we can be is when we're talking to a city, a state, a customer like a Duke that's actually helping us plan with them around how to become more resilient, adapt, use next generation solutions to provide the cooling and heating. That's where it works best. It's not everyone's answer, but I can tell you we have to get a lot better at planning how to become resilient. And we need insurers to help us. They need to be at the table. We need agencies like FEMA to do that. But you also need the companies who are spending the money on the innovations, because we no longer just bring an air conditioning system. We're bringing a lot more than that. We're talking materials. We're talking heat-absorbing materials for roofing. We're talking renewable energy integration, all the things that's required for us to do the mitigation side, because the mitigation side is what helps us be more resilient.
You know, you're talking about big planning, and and I know that Brock, you and I have talked a lot about the community lifelines, the sort of perspective of community lifelines, and I actually have wondered if, you know, you outlined these very specific lifelines, but cooling could actually be considered maybe in certain circumstance part of that, right? Especially if we're thinking about, you know, some of these areas which are highly exposed. But you have often called for, you know, not just sort of an add-on to current emergency management frameworks, but rather for us to really take a deep look at those frameworks themselves and thinking about how they need to modernize. And so, and part of that is, you know, a partnership with the private sector, including insurance and industry.
Oh, here we go. So I'm very passionate about what I do, and if you don't understand the definition of passion, it's the right mix of love and anger. I love emergency management. I'm angry about the framework that we're currently in to have to operate to address all these issues. And you know, and I say this from experience. I've spent 25 years in emergency management at various levels of government, and I often joke that every time I change jobs, something catastrophic happens. And when I went in to be FEMA administrator, I got 2 months before Mother Nature unleashed on us. And if you think about the probability, I think the country had been 11 years without a major landfall and hurricane until I took office, right? And
No more public office for you.
Yeah, so I might be the disaster magnet, but the thing about it is that very quickly the system was overwhelmed. Not just FEMA's system, it was all these systems that were being overwhelmed. Public health overwhelmed. I mean, 67 hospitals collapsed in Puerto Rico to, you know, everything that was going on. 220 disasters in 2 years, and that's a combination of declared disasters and wildfires, and you want to add more to FEMA's plate. So here's the problem with where we are with the Stafford Act. I think the whole system needs to be blown up and rethought, okay? For one, it's not a framework that's going to help us create resiliency and lead us into the future of a changing climate, okay? Actually, it's a disincentive. I think that the whole way that we declare disasters is a total moral hazard that needs to be deconstructed and rebuilt, okay? And what I mean by that is that what she's talking about with insurance, when it comes to communities proactively putting insurance in place, it actually hurts you from getting a disaster declaration in the future. There is no incentive for a community to do the right thing. For example, the Stafford Act does not reward you for land use planning, proper building codes, and proper insurance in place. It actually rewards you for being uninsured. It rewards you for, it doesn't even really address a building code. There's like 13 states that don't even have really a functional building code in place, and yet we want to blame the insurance companies for moving out. Really? So think about how we redevelop this system. And I always say it's like a rusty bicycle that we keep strapping new parts to. Yes, you can add heat to a disaster declaration. I'm not sure what that problem it's going to solve, because FEMA is in the consequence management business at that point, right? So what are the things that have to take place ahead of time? The other thing that happened, because we were getting hit, and what Ashley's alluding to with Community Lifelines is that we've got to make sure, FEMA's a very small agency, 21,000 people. So think about that like there was a movement in Congress at one time to go hire 100,000 IRS agents. Put that in perspective. Okay, it's a very, very small agency that is asked to be doing more and more. So we have to be very careful with how we mobilize response assets and recovery assets out into the field, because there's just disasters everywhere. And after Harvey, Irma, Maria, the California wildfires, a volcano in Hawaii, North Korea launching missiles, I mean, it's complex, right? Half the globe is being blown up. Where do you send your resources? Who is at greatest risk? Where is loss of life going to occur? It's a very hard decision to make. So we started asking the question of what's got to be working in a community, that if it's not working, then people are dying or life routine is disrupted. I don't really care what the hazard is anymore. What I care about is a framework that can address anything that's thrown at you, okay? So what's got to be working in your community? You have to have safety and security. Without it, you can't respond. You can't have a viable school, community, whatever. You have to have communications. Who owns the communications in your community? Not FEMA, right? 85% of the infrastructure that we depend on is probably privately owned. So why do we think we're in charge from an incident command standpoint to be able to get them back up when we're not? And we've got to refocus, like in comms, hospitals and medical systems that are privately owned, to power and fuel the most important thing that's privately owned. Instead of thinking that we're going to swoop in and solve all these problems and rebuild power grids and do all this, maybe we ought to be refocusing our mitigation and response tactics with the private sector and saying, what do you need to make sure you never go back down? And if it does, how can I help you with what I have, right? So I'll stop there because I could keep going for about 8 hours.
Well, you know, one of the things you brought up before, and, you know, that I've heard you talk about before, is sort of the energy reliability in the face of a disaster, but especially with heat. And one of the challenges that we often find is that, you know, we've talked about heat being a multiplier, and, you know, we have thunderstorms that blow through eastern North Carolina every day in the summer, and sometimes it knocks out power. And, you know, some of my friends here from the Sandhills, I think I just saw Greg Richardson walk in, you know, power can get knocked out in those communities in Robeson County and Scotland County and Sampson County from a regular thunderstorm. And because the power company, obviously for good reason, has to restore power where they have the highest density populations first, you'll find that these rural communities are often maybe 2 or 3 days without power from a regular thunderstorm event. Well, now you've taken what's a nuisance event and turned it into what could be potentially very deadly or very dangerous event, especially for people who have underlying chronic illnesses. And so, you know, Jennifer, I know you've been working a lot on clean energy investments, and there's been a lot of people talking about the need to empower communities with solar, but also, you know, backup. We have folks here from Footprint Project who also do this, bring in trailers of solar. But, you know, how can we finance and help communities finance clean and stable energy?
Love the question. Thank you, Ashley. And I brought a prop because, first of all, thank you for inviting me to this. And I love my prop. And also, it serves as notes, so a very dual purpose. Really appreciate it. So yeah, thank you for having me. I am learning a lot. This is not normally the area sector that I get into, but I have learned so much, and it actually overlaps a lot with the climate and energy sector that I am in. The North Carolina Clean Energy Fund is a nonprofit financial institution. We go by the green bank model, for any of you who've heard about that. Basically, green banks fill gaps in the financial marketplace, specifically for clean energy investment, specifically for underserved and disadvantaged communities. And so I really enjoyed the conversation yesterday morning. Leah, thank you. Angela, for bringing up the topic of the communities that we serve, right? These are often the communities that are overlooked, not only from a mitigation perspective, but also from a financial assistance perspective. And so what we try to do at the Clean Energy Fund is to blend finance, right? So there are a lot of great programs out there, especially with the Inflation Reduction Act, from the EPA, from DOE, USDA, HUD, FEMA, others, right? But they're all kind of siloed today. And so when we take a look at a community or specifically an individual household, it's often difficult to figure out how do we piece all of these pieces together so that we come up with a solution. What we try to do at the Clean Energy Fund, we're very mission focused on trying to figure out that puzzle. I love puzzles. So we try to figure that out. So we try to figure out, okay, what type of funding is coming from the public level? How can we use that and leverage that to bring in private investors, to bring in private capital and others, because we feel like that's the only way we're going to solve this problem is together. One of the things that we often find is we're trying to build out an ecosystem of clean energy lenders, and some of them are interested, but oftentimes it's too risky. And I think this is a very good example of something that's too risky. It's misunderstood. I don't think people understand what the issues are that underlie it, and so they won't be investing in it. You know, we can't do that right now. That's too risky. So the Clean Energy Fund will come in and say, well, what would make it less risky? Could we offer you a loan loss reserve, perhaps, so that if you had a default, that you could come to us and be made whole? Could we offer insurance solutions, perhaps, that would help to make the overall investment a little less risky for you? Can we co-lend with you to make you feel more comfortable? With the ultimate desire, I guess, or the ultimate goal of making them feel comfortable so that they're doing the lending on their own. They are picking up all of this investment in the private sector so that the public dollars are no longer needed. And so you're going to hear me say this a lot, and also in our roundtable today, we need to be thinking creatively about how we break down the silos between all of this different funding, and we look at the individual household, or we look at the community and say, what are the needs that need to be met, and how do we piece these pieces together?
Sorry, I thought somebody was going to respond. Okay, so I'm going to pull a little thread. I'm going to try an experiment here and kind of get us into a narrative and see, with all of us up here, how realistic is this narrative, right? So, the Government Accountability Office last year published a report that said that 40%, the 37,000 public schools in the U.S. are without adequate HVAC. Okay, that was their report. And you might be surprised that, no, those schools aren't all in Vermont, right? Those schools are, here in North Carolina, we have quite a few. Mississippi has quite a few. The areas that are, in fact, some of the highest risk for heat exposure are also the areas that have schools with with inadequate cooling. And a lot of this is happening in communities that don't have the credit rating to seek out what would be normal finance mechanisms in order to remedy what is an incredibly expensive infrastructure cost. Evan Codry yesterday talked about a program online that you can go to, and I don't know if I see Evan, if he can tell us again what that was, but they kind of map out the trillions of dollars it would take to do this infrastructure upgrade, and it is trillions of dollars. And so I know that, we have, Trane Technologies here who absolutely has the technology to efficiently and affordably cool schools. We have, finance sector who, certainly has the products to help public schools finance this. However, the risk is too high. And so is it possible that we can conceive of using some of these public dollars or some of the things like you were talking about, Jen, to buy down that risk, to make it feasible for these same communities to be able to properly cool their schools, which could then be used for cooling centers and other things, and the insurance sector incentivize this with lower insurance rates? I mean, to me, that is the epitome of blended finance. And so I just want to I don't even know if that's a pie in the sky idea. Would that ever work?
Yeah, so real quick, one thing that is not being discussed is there is $1 trillion available right now. And only 125 billion of it's been obligated under Infrastructure Improvement Act, right? Here's the barrier to entry. And actually, let's talk about where that money is. It's like 800 different grant fund opportunities, right? The three largest buckets are energy, water, and transportation, right? The barrier to entry for, and I had dinner with my friends from Mississippi last night. Here we go. The barrier to entry is the application process. So when you talk about the low to moderate income, depressed communities or whatever else, one, they don't have the technical expertise to go after, one, understand what they're entitled to from the federal government, how to sequence all that money and accomplish their goals. They don't have the technical expertise or the staff to be able to pull it off. And the barrier that I think a university like Duke could play, to help them overcome is the actual application process. And if you win the grant for them, then there's a 5% management cost typically attached to that grant to where they can hire Duke to come in and run that grant cradle to grave and, and go from that area. There is no reason why city and county managers cannot achieve their goals right now with the amount of money that's out there, but there's grant fatigue, there's a lack of know-how or an understanding of what you're entitled to from the federal government right now, and that's the biggest hurdle.
So I really want to emphasize that because it's also the way we're thinking about it. And Brock, you said this just a minute ago. Let's not be hazard specific. There are so many schools where FEMA has funded a safe room. These can be community centers. These can be multi-purpose uses. Start thinking creatively. Make the federal government tell you why you can't do it. And exactly, why can't Duke or other nonprofit philanthropic partners come to these communities and think regionally? Thank you, Lydia, wherever you are. Think regionally beyond the community to come together, bring all these partners together. Start thinking creatively. What are all of the possibilities that we could use that facility for? Think of the pot, the blended finance that we could use to bring that community everything that it needs. Start talking about risk, comprehensive risk, how we understand risk, how we draw down that risk, and make that community more resilient. Not just talking about heat. Heat is not the only risk that community faces.
And from Trane Technologies' perspective, most companies like ours, we also have part of our business model is to also have an energy services company where we actually do the upgrades at school systems that go through the process of the paperwork, and there is a good bit of bureaucracy there where the upgrade to the school building, providing the new cooling and heating that's more efficient than what it replaces, the energy savings from the new system pays for the capital improvement. The issue is, to your point, we have 37,000 school systems that have still not even tried or attempted to take advantage of a model that already works and is existing.
So, I mean, is it that they don't know about it? Sorry, I will get to
They don't know, or they've not been willing to go through the paperwork, the process.
The burden is so high. Okay. Jen.
Is this the crazy idea time? Okay. This is all crazy idea. Okay, so my crazy idea is, I love the idea, I'm not sure, Brock, I think it was you that brought up academic institutions. My crazy idea is we have all these passionate students that are going through our university systems, including here at Duke, but just across all of our states, right? Why can't we create I'm calling it a climate core, but it's probably already been done, but something within the university system where we're training our young people to be these ambassadors, these translators, as we talked about in a roundtable, to go out into communities, to help them write the grant applications, to help them think about all of the different issues that are surrounding their communities and help them piece it together. I mean, I think we can do it. It would take a leader like Duke University, perhaps, to kind of think what that looks like, but then let's roll that out across the country in our colleges, universities, community colleges.
I mean, I think so. I want to test that a little bit with this panel up here. I mean, I do think universities definitely have a role to play, and certainly the climate commitment has prioritized sort of climate literacy with students. But I mean, it's a little bit. I mean, and there are university administrators in the room, but I think it is a challenge. The university isn't right now set up to do that, and so just like Brock has talked about with, getting a little bit outside the boundaries of what FEMA normally does, this is also something that would be a new thing for universities to do in a new way, though not to say that they're not willing to do it, but I think, and that's one thing about that, and I'd be very interested to see if anybody puts anything in Slido here about this. But the other thing I wonder is you are talking about relatively very young people with relatively little professional experience. And as someone who regularly takes students into communities to do work, right, there's actually a burden on the community partner to manage those students, to figure it out. I mean, students aren't professionals when they walk out the door of the university. They need internships along the way to turn them into professionals.
So the thing that I see and like what we do is we help people understand that. The problem with the process of applying for a grant is if my company comes in and helps you apply for the grant, then I can't manage it when you win it because of the RFP process, right? And I get that, right? But I'm also amazed at the number of states at the gubernatorial level that have not taken advantage of the funding that is there. And now, and in their defense, they face grant fatigue. I mean, COVID was a reimbursement nightmare. You're talking billions of dollars. A lot of money was still left on the table just from COVID. And then here comes $1 trillion in IIJA. And, you know, there's all these other grants that are out there that you can go for, like the BRIC program at FEMA. And it's overwhelming. And, you know, how do you use it and sequence it all together is the problem. So maybe the attack of the local communities is banding together to get their governor to do something about it. Because a lot of states, like there's a model in Wyoming, there's a couple other states where they are, you know, hiring people to come in and provide umbrella capability down to the local governments and provide the technical expertise and pushing forward. And that might be a better model.
So, you know, you said there might be a better model, you know, and I think you guys given a few, certainly Scott with your recent examples, but are there other models, you know, Jackie, I know that you've been working a lot with communities thinking specifically about heat, but are there other kinds of models that we can think about that could attract private investment or ease the transition with public investment in initiatives that are meant to mitigate the impact of heat? I know that you know, a lot of people say, oh, brick is, you know, the resilience, you know, for resilience, but it's been very hard for communities to apply for and succeed with a brick grant for heat mitigation. And, you know, I don't know what the answer is here, but the truth is communities who are trying to address the issue of heat, whether it's through Miami, I don't know if Dr. Holder is here, but Miami's done some really great work at getting air conditioning units to different housing apartment complexes in Miami, but that was hard won. I mean, that took a long time and a big effort to get something that is, you know, shouldn't be that hard to do. So are there models that work for other things that might work for this?
No matter the model, it's going to take a collaboration because just getting them the air conditioning systems that we might provide does not address the long-term energy cost issues that are associated.
Is there a model that addresses the long-term, other than LIHEAP, right? LIHEAP right now doesn't have efficient funds for cooling, right? They run out of money every year.
I'm going to yell. I'm going to go back to my blending idea. I mean, one of the things that we're talking about is using the LIHEAP and the weatherization for the homes themselves, but oftentimes, and we talked about this yesterday, some of those homes can't be in the LIHEAP and the WAP programs because they've got health and safety things going on in their homes, or it's just something that you don't want to do energy efficiency on. So we need to figure out a way to blend some financing for the health and safety aspects first, get them into these weatherization programs, fund the weatherization programs, move them into programs like Solar for All, which is part of the Inflation Reduction Act, Greenhouse Gas Reduction Fund, get solar on them, get them closer to net zero so that we're reducing their energy burden. And by the way, making their homes healthier. So, excuse me, making their homes healthier so that they are, you know, it's a all-encompassing type of investment that we're making.
Ashley, on that question, who should own it? If you want to put forward a grant to provide air conditioning units, who in the federal government or state government should own that? Please don't say FEMA. Who owns it? And I think that one of the things that's resonated with me is that people don't understand the proper swim lanes of the different federal government agencies here. It's one thing to say we need to strap like heat to a FEMA disaster declaration, but there's a thing called a public health emergency. There's also a disaster declaration that USDA can declare for agriculture purposes. FEMA doesn't get involved in the agriculture side, you know, and so immediately people think FEMA, but who should own the grant program? And then how do you go out and arm them to be able to do it? You know.
And that goes back to Pamela's comment earlier about roles and responsibilities and really understanding the role and responsibility of different agencies at the federal level, but also there has to be, Jackie and Scott, there has to be some limits too about what the public sector can do. I mean, where are your boundaries?
Well, the private sector, but I was going to say
Private sector, sorry.
Yeah, but I was going to say one thing on the grant. The grants also can't be used for investment. So, for example, if you're talking here about blended finance, one of the obstacles to a lot of these grant programs is they can't be used as a blended instrument. So they can't be used for first loss if you're trying to crowd in private sector. They can't be used for premium. I'm not necessarily advocating that they should, because that's not necessarily a long-term solution, but I think it would have been appropriate to at least put some language in for pilots, so to test certain types of new interventions and to have more flexibility of the money. So that when people apply, they can say, oh, I'd really like to test out whether or not this insurance program works, but I don't have the premium to pay for it. They can't use BRIC funding for that currently. So I think that changes to the flexibility of uses, and that might or might not be in legislation, right? It could just be in rulemaking and just rethinking. If you want to get the money out more quickly and you want to crowd in private sector investment, you might want to rethink how you can use those funds.
And I think that there are some, private sector organizations out there that are trying to, whether it's through kind of like a revolving loan type model or kind of a trust model, to generate that capital that tries to offset those things that the federal government can't do. And again, that's the innovation that the private sector can bring. There are so many flexibilities that the private sector can lend to this process to be part of this blended solution. And I will say, I think Brock would probably agree with me, that most of the restrictions that we have are self-imposed.
Yeah.
We have a beautiful set of authorities, and that's not just because I feel like my hands have been in a lot of them, but most of our restrictions, we've tied our own hands. So we do need the private sector to kind of be like, that's not working for us. You need to do that differently. Break down that programmatic restriction. That's an administrative requirement, not a legal requirement.
So,
sorry.
go ahead. Yeah.
No, I was just going to say, so since we're on this panel and we're all free thinking, and Pam and I are friends, but I'm just going to push back a little bit on private sector pushing. So like, for example, and I'm going back to Brock's comment about the Stafford Act. I deal in the realm of the possible. Love your idea of blowing up the Stafford Act. Likely not going to happen. So let's work with what we have. And there are it does incentivize there's language in there that incentivize mitigation, and mitigation in the realm of mitigation investments and insurance. And if a state, city, or municipality takes that up, then in theory, well, not in theory, but in law, then their federal risk share will go up. It will go from 75 to 85%. The rulemaking around that has not happened. So, and it won't. And it won't. So there is some sort of incentivization. It's trying to incentivize for states to do more with their state dollars in order to prepare in the event of disasters. However, that hasn't happened. So I think that, and there have been calls from industry to have rulemaking to have that happen. So you're saying, what can industry do? What more should we do in order to ask the federal government? And this is not just about us selling more policies. I think we all fundamentally understand that insurance is about dispersion of risks across the system. It's not for any one company to sell more money. It's so that we're all better prepared and no one entity is more at a loss. But what more can we do to get FEMA to do that?
I got an ask. First, you know how ESPN has their top 100 recruitments for football and basketball, whatever. Pam Williams is in my top 10 emergency management list, and what you don't know about Pam is that she and I worked very closely. I could not, when I was in office, I could not lobby Congress to change laws, but I could advocate. She could lobby Congress and was really instrumental in behind the scenes of getting the Disaster Recovery Reform Act passed. And so I testified 10 times in 2 years before Congress and kept saying the same thing about more mitigation of BRIC. So Pam was really instrumental behind the scenes in creating that program, which is interesting. But I bring that up to say, a lot of people have no idea how to advocate or lobby Congress, and if you're just going up on the Hill to push here with some Stafford, I'm sorry. Yep. You got to learn how to attack Congress. You attack and change laws and different things to better the system. When FEMA's got to ask for a supplemental for more funding, and we had to do that 3 times, or you attach language to a must-pass bill like the FAA bill, the budget bill, because if that doesn't pass, then Congress can't fly home. So you learn how to attack these things. And the reason I say that is I am a big believer that insurance is not an enemy. It's part of the big solution, right? energy is not the enemy, it's part of the solution. You know, the financial sector is a big part of the discussion. What we don't have as a concerted, a focused lobbying group that is fighting climate change. We have too many political extreme voices in one area or the other. We're disjointed. We're asking Congress of 1,000 things, not 3. And what I would love is if the insurance industry, the energy industry, the financial industry could sit down with the emergency management industry to formulate an agenda, have the language written, and change the laws. Because right now what happens is after every bad disaster that doesn't go well, we got to reform FEMA. Come on.
Done it 3 times.
I love how your Mississippi just came out when you said that. We got to reform FEMA.
I was Alabama, actually.
Alabama, sorry.
4 years in Alabama. No.
Alabama. I stand corrected. Or I guess North Carolina. Your North Carolina came out. Scott, you talked about like innovating in the private sector. I mean, there's a couple of questions in here I want to make sure we get to. And Scott, you talked about innovation in the private sector and the idea. And Pamela, you talked about needing the private sector to sort of, innovate for the public sector. How seamlessly does that work? How open is FEMA to the innovation that's happening at, that Scott's building at Trane? I mean, how difficult is that process in reality?
I mean, we have great examples of other agencies we work with. I can't point to FEMA, though. I was sitting here trying to think about that. But DOE and others, we do a lot of partnerships, piloting, demonstrating new ideas, sharing in the cost of innovating a different way to apply cooling or heating to a building. So we have great partnerships, and that works well. There's existing programs that I could talk all day, the ARPA-E program and others that are really, really helpful. And obviously we're welcome and open to working with others like FEMA if there's a place for us to do that.
And you never get there if you never start. I mean, I think about the way the National Flood Insurance program started. We could have never imagined doing reinsurance, right? But you got to plant the seeds today if you're ever going to grow the tree that's going to bear fruit.
I love that you said that at Roundtable the other day. And, for those of you who are not in our Roundtable, I think, you could feel free to expand upon this, Pamela, and the idea that things are slow. It's kind of like what Brock was just talking about, too, is like these things are a process. And, what was the example you gave in Roundtable? I'd love for you to, what you're doing now after 9/11.
Yeah, I mean, we started something in the year 2000 that didn't come to fruition. It's the management cost that Brock talked about. Did not come to fruition until 2018.
17, it was Harvey, right?
Well, but the law didn't pass until 2018.
Yeah, so I think that, that's something key for all of us to remember as we're thinking about these big policy changes and initiatives is that's not something that happens in one cycle of Congress, right? This is something that is a long game that we have to play and planting the seeds now for what that end result is to the points earlier.
But the other thing that FEMA did that was innovative that, FEMA never makes good news, right? You only hear about the ones that are really political and bad. The thing about it is that FEMA is doing some innovative things and trying to rethink. So the NFIP, National Flood, you're technically FEMA is the largest insurer in the country, right?
Actually, the largest insurer of any single peril in the world.
There we go. See, and I don't know much about insurance, so. But the thing about it is that because the NFIP kept running out of money, and you're constantly having to get Congress to reauthorize it, what we did is we tested capital markets with the reinsurance industry, and I remember we wrote you a $124 million check paid a premium, and then Harvey hit 2 weeks later, and you guys cut us $1 billion check.
And we were right back there the next year.
Right, and then you came back, and we upped it to like $5 billion, and that way Congress turned ahead and was like, wait a minute, you can't do this, and I was like, we just did. We don't need you all the time. We're forced to find new ways of doing business if you're going to keep kicking a can down the road and run a program that's not financially solvent.
And that took, Swiss Re and Guy Carpenter were the ones who were the first to help put that together. And that program took over 7 years to get that going.
Wow, that is a long time. So, to kind of bring you into this conversation, Jen, we've been talking a little bit about, you are working directly with communities who are trying to sort of piece together all of these ways to finance what they're doing. And, what is it that you think, is there anything at the policy level that would ease that transition or ease that process for you and for the communities that are trying to do it? I mean, how can the public sector, we're talking about sort of the built-in bureaucracy of these things, how well they incorporate feedback from the insurance sector, innovations from the private sector. What can be done to help you do what you're doing with sort of mashing all of these finance structures together?
Yeah, I'm going to go back to what Brock was talking about, like bringing the different parties together. I don't feel like that's happened, and I think that could happen not only at the federal level, but also at the state and local level as well. I know our state is really trying hard, North Carolina, is really trying hard to move a lot of the ideas forward, but they are siloed too. So it's not just at the federal level, and I think even in local government sometimes. So I think to the extent that we can break down those silos and have those conversations between different agencies and bring in the private sector as well with those discussions, I think that's going to be helpful. The Department of Transportation and Department of Energy, when they launched an electric vehicle infrastructure program, I'm putting on my DOT hat for a second, they put a joint office together. So it was the Joint Office of Energy and Transportation, I think. Is there something that we could do at the federal level that would be something similar to that for this type of a conversation to happen and just bring in the different agencies? And the other thing I'll say is, and I can't quote all of them, but all of the different funding sources from a federal level that we're looking at, they can't all be blended together. There are some that you can't use in partnership with another, and sometimes you have to bring in state funding, sometimes you have to bring in private funding, sometimes you have to bring in maybe philanthropic funding. So it makes it difficult when you have these different barriers and they're different for each different type of program. You really have to understand each program to make sure that you're getting it right and you don't get kicked out when you put your application in. So just to streamline things, maybe make them more consistent and break down those silos.
And Ashley, we're talking at the macro level, but if we go down into the micro level on what does it really take to get some of these programs that are going to help the most vulnerable in place, I'll just kind of use the example of, we just recently did the very first flood parametric in the city of New York. And essentially what that program was it was a not-for-profit who has took out a parametric insurance policy. And in the event of a flood in 5 neighborhoods that are in high-risk flood zones, the policy will kick out and they will be able to give $15,000 per household in those areas for low or moderate income individuals. Sounds really neat. It's an insurance product, but it's a program. And what it took to bring that program to life took over 2 years. And the people who were involved in that program were National Science Foundation, EDF, SBA, Guy Carpenter the broker, Swiss Re the insurer, the mayor's office for New York City, the City for Emergency Management in New York. So even putting these smaller programs together, they're programs, and insurance is literally, just think of it as a tool for funding. It is not, it's really to support the financing needs of that community. But it took all of those individuals at the micro level to put together. And similarly, we're trying to look at something on extreme heat in LA, and the number of individuals and different stakeholders that are involved are very similar. And even at the local level, there needs to be a relationship. Oh, and I forgot, there's even the insurance regulator, because I think most people here know that insurance is regulated state by state. So when you have insurance involved, the federal government does not get involved with respect to insurance. So it's complicated even when you're trying to put together these small level interventions.
So I want to come back to parametric real quick and ask Pam a question, but two, regarding your point about the complexity of the funding, to give you an idea about how we strap new parts to a rusty bicycle. When I was in office, if you add up all the recovery dollars that were estimated to go out and fix communities for the 2 years I was in office, it's more than the 9 previous FEMA administrators before me combined. And I had to ask for more money 3 times from Congress and the DRF. They appropriated that money. It went to 20 different federal government agencies to fund 91 different recovery programs. So there does need to be a massive consolidation, right? And that was before COVID. That was before all these other things that came out. The one thing about the parametric insurance thing that I've often thought with FEMA mitigation dollars is that we tend to think of mitigation as being brick and mortar, which the BRIC program was. If you identify the lifelines and you know this is what's got to be working in your community, then we need to be focusing mitigation dollars to make sure that infrastructure works, right? But the other aspect of the definition of mitigation is saving lives, not just property. The first part's saving lives. in my opinion, I would like to see more mitigation grants being able to go into depressed communities. I'll use like Princeville, right here in North Carolina. It's devastated and Floyd, various areas, whatever, had a hard time overcoming. What if you could apply for a mitigation grant to offset the cost of insurance parametrically, right, to invite the insurance companies back in? But you can't just stop there. Next, you got to bring in the Department of Commerce, the Department of Labor. You've got to do education, like financial resiliency, how to break negative cycles, how do we bring in job opportunities? What are the other grants that have to be coupled with that to be a more holistic solution, rather than just putting that Band-Aid over a bullet hole and saying, all right, we're going to cover your insurance or reduce your premiums for a little bit. So how do you arm the rest of the federal government agencies to supplement the programs around a FEMA grant?
Answer for you.
Let's do it.
So I have to make a plug for this because I think this was a great example of where the private sector came together to arm FEMA with the right authorities and resources to pave the way for us to do just that. And that's the Community Disaster Resilient Zones Act, which the president signed into law in December of 2022. Francis has been involved in this. Lydia, Nick Schufro mentioned the National Risk Index yesterday. So this is an effort where Congress told us to identify the census tracts across the United States that represent the most at risk and the most in need. Please go to FEMA's website, Google Community Disaster Resilience Zones, CDRZ, CDRZ, and look into this, because we designated zones in every state. We are about to do our tribal and territorial designations. But what this recognizes is that based on data, these are the areas that are most at risk to natural hazards and where we need to be prioritizing our focus, not only for the federal government and not only for FEMA, but across every federal agency, but also the private sector. This is where we do need community navigators. This is where we need private sector investment. And I will tell you, the insurance industry was wholly behind devising this because they are trying to figure out, how do we get worthwhile, cost-effective, risk-reducing investments being identified and prioritized in these communities. And so we have been working in lockstep with them to try to crack this nut. And I do think that this has been a great framework, because we now have over 13 other federal agencies that have stepped up to use this prioritization tool to really drive their other federal programs. So NOAA is using it, EPA is using it, and it's just really, really exciting, because it's kind of helping us understand how we're going to get where we need to be first and do some of these pilots. We have some great private sector foundations that are doing pilots in these in these communities. Yesterday, Lydia and I definitely talked about the need to kind of more regionalize this. Like, you can't just drill down into a single census tract. Like, you need to kind of pull the lens back a little bit. But we're learning a lot of things. It's not perfect, but this is something that's going to be so very important in helping us innovate and kind of get beyond some of those kind of past crutches that have been boxing us in.
Well, I want to just, although I will, I'm not necessarily pushing back, but also saying, is heat a consideration in those disasters for those Cedars communities? Because this is why adding heat to that list is important. And so that would be a reason why that's something we need to think about, right? Because what you just outlined is fantastic, and I love that. I don't know if Luke Parsons is in this room, but Luke and I, there he is in the back. So Luke and I and some other colleagues published a paper last year where we demonstrated there are communities in this country who very soon will hit a threshold in which it is unsafe to live without air conditioning. It is unsafe. And you might be surprised at how many it is and where they are and how quickly that is coming. And so getting those dollars to that framework that you just outlined would be wonderful. It's just that heat typically is so left out of those considerations that I'm not sure that those communities that fit what we found are actually also identified as a Cedars. And so I think this is something that needs to change. I mean, we're here to talk about heat, and that needs to change.
And I think that's the perfect point, because Nick is in charge of the next designations.
Coming to you, Nick.
And He is absolutely looking at what data sets need to be rolled into the National Risk Index to help prioritize, right, those next communities that are going to represent the most at risk and the most in need, to make sure that we are effectively identifying those. And they are having that conversation right now, have presented to the administrator COAs. It's a very exciting conversation. We've done RFIs because this community is critical to making sure, like, we know our data sets aren't perfect right now, but how do we plant the seed today that puts us on a trajectory so that we are getting to the right communities moving forward in the future?
Nick, it's probably on your list, but the Climate and Environmental Justice Screening Tool, CJEST, is the one that we use for all of the EPA programs. So yeah, it would be great to put those two together.
Yep, we overlaid CJEST on all of our communities are CJEST communities.
Great. I mean, and I think, somebody mentioned in the chat too about NIHIS. I mean, there already exists, the National Integrated Heat Health Information System at NOAA is designed to coordinate, federal agencies around heat. And so, Nick, I'm sure that, I know you and Julie have a close relationship. I'm sure you're talking to NIHIS. But I think, how can we continue to make sure that when we are having these discussions about these policies that do impact the flow of money as it goes down the pipeline, that heat is actually part of that conversation? So I'm not sure how to fix that other than, Nick, everybody's got your email address, and we're all going to email you when this is over.
Nick.Schufro.
Okay, so I always like to wind these up with like some hope, right? We like to end on a positive note. For those of us who work in this space, it can be really daunting to try and think about all the hurdles that we have just outlined in this conversation. So I'd like to just kind of go down, and Jen, you want me to start with. Okay, so I'm gonna. Okay, maybe I'll start in the middle. Scott.
All right.
I'm going to start with you, and so tell me, what gives you hope, or if you aren't thinking about it in that way, what are some policy interventions, some models that you have seen that maybe are applicable to this? But I really want to hear what gives you hope.
Yeah, there's a lot of things that give me hope. I don't think we've ever seen as many partnerships and people searching for partners that we do right now, whether we're talking about government, private, or otherwise. It's at an all-time high, and at least my company feels it. We have people everywhere partnering on a variety of solutions and focus on increasing access. But there are some things in our past, though, that do point to how things work. I mean, let's just building codes. Maybe no one in the room knows much about building codes, but you can't build a commercial building like this one without fire suppression. That's just a standard, and all of us are nodding our heads like, yeah, everyone knows that. Because why? It wasn't like that 100 years ago, but it is now. And in the future, we should get to a place where we're nodding our heads too, because it made sense that no building is built without cooling and access to cooling. And we can do that. We have the solutions today. We just haven't done the work of making sure it's codified and that we expect it, just like we expect fire suppression. Just like we expect fiber optic cable to be moving into communities across the nation, we need to expect more and push that way. I love the comment earlier about we're all out there talking about too many things and not focused, and it's like a buckshot approach. And so we're part of the problem right now. Hopefully this conference is the beginning of us focusing our messaging around a couple of things that we can all go after together.
You just brought up something really important, and I'm going to tag on to your hope, right? And that is, I think traditionally we have seen air conditioning as a luxury, which is why maybe we haven't thought about it in prisons. We have someone here who does research on thinking about cooling in prisons. I think Tennessee is the only state in the Sun Belt that has mandatory universal cooling in prisons. The rest of them do not. I think one thing that we do have to change, Scott, and gives me hope of this conversation and what I'm seeing in the media is that we're transitioning our thinking around cooling to a life-saving adaptation for extreme heat. So Pamela and Brock, which one are you next? Because this dictates the direction we go. What gives you hope, Brock?
Well, I know if I'm going to commit a crime, I'm going to Tennessee to do it. I learned that today. We'll put that in the after action, Martin. Where are you? No, in all seriousness, it's not so much what gives me hope as much as it is. I want to leave you with a model, and Group Yellow. Thanks, appreciate you guys. It's been great. and I said this yesterday, you know, to me, successful disaster preparedness, response, recovery, mitigation is like the chair that you're sitting in. And if the community is that seat, right, it's stable because it's supported by 4 different legs. First leg is a true culture of preparedness within our society that does not exist. Our kids don't know how to call 911, do CPR, or invest $1 towards their retirement. We've got to basically stop looking at everybody as a victim. I realize there's people that can't help themselves, but most of us could be put in the ball game and become part of the solution as citizens. And we have to arm them with that knowledge and tangible skills, right? That's one leg. The second leg is a strong state and local government. You know, it's not just the capability at the federal level, but what is the standard at the local level, the state level? What are the accreditations? I mean, is there an accreditation to be a local public health officer? Next thing. The third leg of the chair is a strong private sector and nonprofit organizations in disasters, whatever. So the private sector owns 85% of the infrastructure that we rely upon, right? Instead of, you know, telling them to get the power back on, or, you know, we need more insurance, whatever, like, we need to recognize what they go through, but also how to help them mitigate and respond as well. It is definitely a public-private sector partnership. They're the most important people that make things work in your community, right? That's the third part. The fourth part is the firepower of the Federal Emergency Management Agency or the federal government, right? I mean, it is your job as a FEMA administrator to marshal the resources of the federal government down through a governor, ultimately to the local level, to overcome the situation. All disasters begin and end at the local level, okay? And so we have to realize that if you remove one of the legs of that chair, the whole system becomes unstable. And there's plenty of examples where only one leg of the chair went into the disaster. One was Louisiana during Katrina, and one was Puerto Rico during Maria. And you can debate me on that all you want, but when FEMA is 911 and you're looking at them to be the savior of all these extreme heat problems or whatever else we're thrown at, you're barking up the wrong tree. It's a partnership, and this is a team sport going forward. We got to check our politics at the door. We need to come somewhere in the middle and start developing pathways to resiliency.
Do you think, is that giving you hope? Do you think we're closer?
I'm a bunker prepper. I'm just kidding. Nah.
Okay.
I think we can. I think we can come together.
Turn his microphone off.
Who's controlling his microphone? Jackie, you're up.
Oh my God, how do you follow that? So I'm an intrapreneur by nature. People know what an intrapreneur is. It's basically going into big organizations and trying to make them innovative and work better for society. And in my little kind of zone of insurance, I think one of the things that gives me hope is something that we talked about here is, as I started, insurance traditionally is on the property side, used for property. And I think that we need to change the mindsets and think about insurance to support citizens. And I think that that's what Parametric gives you. And what kind of gets me up in the morning is one of my colleagues here, kind of from the Department of Insurance in California. And of course, we're going to look west to some of the progressive states. But what gives me hope is that there are insurance regulators who are starting to think more progressively about the role of insurance in society. And it gives me hope that we can create new financial instruments that are going to help solve some of these problems.
Want me to go? So, yep, definitely partnerships, but I'm going to go, and I said this yesterday in the roundtable. We have, this is an incredible time with the funding amounts. I don't know, you said trillions. Maybe not trillions, but
It is $1 trillion.
yes, so we have $1 trillion. The time is now, right? So this is the time for us to be having these type of conversations. So again, thank you for holding this. Thank you for all of your great minds out there. But let's get together. Let's break down these silos. We can do it. And the communities at risk are the ones that are counting on us to do it. So yeah, but it's a great opportunity, and I'm excited about it.
Okay, Pam, you have the last word.
Okay. Well, I think back, 20 years ago, we literally had a couple $100 million going to mitigation. Resilience was a bad word. Resilience was a polarizing word. It was as polarizing as climate. And look at where we are now. We could have never imagined the Disaster Recovery Reform Act. We could have never imagined having the BRIC program that is driving more investment than ever before the disaster. Honestly, I could have never imagined having insurance at the table so much. Insurance is a new player at the emergency management table. I have gone into rooms with emergency managers and been like, how many of you know your commissioner of insurance? And they're like, who? Right? And now that is changing. That conversation is changing. The dialogue is changing. That is incredibly helpful. We have climbed so much of this 14er, anybody that's done that in Colorado. I can look down on that little crater lake, and it is incredibly, incredibly optimistic. We have a long way to go, but we have accomplished so much. And I look out across here, there are a lot of young faces here. And they are passionate, they are wicked smart, and they are going to drive this next chapter of the conversation. And it's going to be transformational. I have no doubt about it.
I certainly hope so. So thank you all. I really appreciate it. What we have now is you have a little bit of break before your next roundtable session where we'll do a deeper dive into these topics just like before. So you're headed to your roundtable. We'll see you there at 10:35. So you have a nice little break and get there on time. We got lots of work to do. Bye.